We're on the Euro New Zealand 5-minute time frame, and I've just got my entry on this triangle, and this is only on the 5 minutes, but we can see here that we've got quite a nice directional pole. We've had 2 tests along the bottom, we've had it descending along the top, and we've already had the breakout to the downside, but we failed to hit the 127. Now what I did was I had to set a limit order just here to see if price would come back up and get my entry. It's now done that, so let's position what we need to on this particular trade. So I want to front run it there by 2 pips. I want my stop above this level here. I'm going to want that 6 pips, a full ATR above it. So not a great risk to reward this, but nevertheless high probability trade because we have already had the breakout. So 16 pips of risk for 18 pips of reward. If we just zoom out, you can see that we've broken below this structure level here, and we currently could see this coming down quite a bit further, but these types of patterns I only play for the 127. So that is the trade, only a small one but very high probability now. We're back here on the 15-minute, and you can see price has rallied right up. We have not been stopped out, but look what's happened here. This was our highs. We've actually had a break above, close above this structure level. Now if you use the graceful exit strategy system, then you may be looking at exiting the trade right now for maybe -6 pips like I have. I'm not going to do that. I implement that rule very little, and I only do it when there's a major structure. So for instance, if we've got a very nice structure level like this and we break above it, then pull into it and put in a clear sign that we're going to go higher, then I'll implement something like that. But just violating this one level of structure here on the 15-minute. Also look at what we've done, lower low, lower close. We've now put in a rejection candle just here, and we have just had the hourly candle close, so we can just go out to the hourly and just take a quick look at this. And here on the hourly you can see that we have actually held structure here, and we've now put in a pin bar where we closed in probably the lower 20% there. So no reason to exit this trade, even though on the trading time frame, the 15-minute, we have violated that structure level. For me, I'm just going to hold this and see if we can get down for those targets. Okay, we're back, and as you can see, we have been pushing down quite nicely here for those potential targets. Did get 12 pips up, came just a couple of pips there from target, so I'm actually going to go ahead here and just reduce the risk on this trade. I'm actually just going to give it a bit of breathing room, 3 pips, just so the spread doesn't get me if we decide to come up here a little bit. We'll come back to this trade later. We're back again. Price has decided to push down, 16 pips up, 14.15 now. Okay, my alarm's just been triggered, 16 pips up now. 17 pips up, just spiking through. There's 18, and I just manually exited the position because we shot past the 127, didn't take straight away. There we go, 18 pips banked on the Euro New Zealand. A great example of how the lower time frame, even the higher time frame, where structure can be violated, and a perfect reason why we use an ATR based stop, just to give the trade some breathing room. 18 pips banked.